and the dominoes begin to fall. A third bank now, Signature Bank, has been seized by regulators at the FDIC. It's not good news for anyone. And the news recently came out earlier this evening that the FDIC stated that all depositors would be made whole in the SVB bank situation. Now, where they said they were going to get the money from that was going to be other banks. And then what the Fed always does, they're going to have to print it. They said that it would not be taxpayer money. But as we all know, anything that comes from the government, one way or another, is going to be held up on the backs of the taxpayers in one form or another. And in this case, they're going to continue to devalue our currency by printing more money to bail out the first, that's the second bank. Silvergate first, then SVB, and now Signature Bank. That just happened this evening. At least the news broke this evening. I'm sure they've known about it for a little while. But as you start to see the dominoes falling, and the premise that you're going to hear a lot, at least right now, is that these are, they were heavily invested in the tech sector. They weren't doing things right. It's a primarily cryptocurrency bank that's holding those types of funds. So, when that market is in trouble, obviously they're in trouble. And some of those things are true, and that can be the case. But I think we all see the wolf in sheep's clothing on this one. When coronavirus hit, they took away the 10%. Excuse me. They took away the 10% fund that banks were supposed to hold when they issue back currency and loan it out. So it was 10%. Then during the pandemic, they said, okay, all bets are off, and it's zero. And now they've started to tell banks that they need to get their reserves back up, but I don't think it's really been enforced. And so, when the cat's away, the mice will play. And so I really think this falls more on, I hate to say it, some individuality, but I think it's more the regulators. And I'm not usually one for heavy regulation, but we can see now how very fragile our system is in terms of banking. Banking is just like the dollar. It's a whole bunch of trust. And that's all you really have is trust. And the bank is trusting its depositors not to come ask for their money back all at once. That's what a run on the bank is. And so that becomes a problem when too many people want their money back. That's why they have things like large withdrawal limits, because they don't have the money to give 15 people, say, $10,000 of their money on any given day. Now, that's just me throwing out numbers, but you get the idea that I'm stating. And so it's a very bad situation that we're in. And what nobody really thinks about, when you open up a bank account and you start giving the bank your money, depositing whatever, performing business at that bank, you're actually loaning them money. Think about if you've ever asked for a loan. I know not a lot of us do over on our side of things, but some of us do. And if you've ever got turned down based on your credit or something like that, I find it hilarious, because you're literally one, granted just one, of the people empowering the bank to do operations, to perform loans, to do things. Now, you're only one, and yes, credit unfortunately matters, and I'm not saying they don't have a right to refuse you, but it's funny that you're giving them the power to deny you for things like loans, lines of credit, stuff like that. And it's just funny because without the depositors, there is no bank. At least a given branch location. I'm not saying a whole bank would fold, maybe on a wide scale. But without depositors, there is no bank. It's a trust. And you're giving them your money and trusting that you're going to be able to get it back. But what we're finding out now is, and if you remember, one of my first few videos on this channel was me talking about my bank not really having cash. And we were talking about larger sums of money, but under the large, large withdrawal limit. So even trying to get some of those dollar amounts out of the bank, which is completely within the terms of service, was an iffy situation. Not once, not twice, but 3 times I had issues, and that was in the summer of 2022. So here we are, and we're starting to watch the dominoes fall. And it's only been a weekend. And so it's going to be interesting to see what the markets start doing on Monday. It's going to be interesting to see what happens to the banks on Monday. I have some change with me that I need to either deposit or exchange from coin roll hunting. And I plan on going to a bank sometime early tomorrow morning here on my travels, and I will kind of gauge the situation at this bank and see, do the lines look long? Is there a bunch of people there waiting? A lot of people just don't realize that this is going to be an easy precursor for digital currencies, because this is exactly how you fix this entire situation, unfortunately, is to go to a digital currency. And then you can't pull your money out of the bank because it's just zeros and ones sitting on a database somewhere. You can transfer it to another bank, but you can't pull it all. And banks at that point won't have, maybe technically somewhere in there they would have problems with liquidity, but I don't think on a whole, if you're just transferring ones and zeros in a mainframe, I don't think there's a whole lot of problem that they could get into. If they truly go bankrupt. But as far as you getting your digits out of that bank, it doesn't seem like a problem. So this, I think, is just going to be another reason to rush to these central bank digital currencies. And who knows what that's going to look like and how fast that transition is going to be. But what I'll tell you, what I do see, this is not helping. And something like this is exactly what the general public needs, to then just go, oh, well, yeah, if I can't get my money, then yeah, just digitize everything and then I have access to it whenever, which is true and isn't, as we know on our side. We value physical assets, but most people nowadays do not. And this is very concerning. I said on a comment on a video earlier, Savage did a video. Congratulations on 6K subs, by the way. But I made a comment on his video that I thought this was just the beginning, and that was before I knew about Signature Bank and before the wording of the bailout came, where they claim in one breath that it's not going to be the taxpayers paying for it. They're going to try to raise funds from other banks, and they're going to try to see if they can find someone to buy SVB. Maybe they will. But whatever that deficit is, they're going to print it. They're going to do what they always do. They're going to print the money. And we all know how that's going to go. Inflation's already bad enough, and now they're going to print who knows how many billions of dollars to try to bail out this bank. There were a lot of big companies had a lot of money in this bank. And anything over 250,000 is not insured. So we're bailing out corporations, and taking a financial hit for them, which again puts us back in the same situation. These are the same corporations that we put into business by choosing their products and their services. And when they get in trouble or they make a mistake, we suffer. But when we make a mistake, or we suffer, or we lose our job, or we fall behind or have a medical issue, we lose our house. We're homeless. We have to, get creative and go live with family or in laws, or take a much lower paying job than we otherwise would just to make ends meet, whatever have you. We have to make do. And they get bailouts and bought outs and whatever else is about to transpire. And I'd like to think that the general public is starting to catch on and starting to get fed up with it, but unfortunately I don't think it's enough to sway the general public opinion on a whole that this stuff is unacceptable. I thought for sure after 2008, we had learned our lesson. And this just goes to prove that we haven't learned anything. We have, maybe on an individual level, but these companies, these corporations, these banks, they haven't learned anything. Same old tricks for a new time and a new period, and we're going to continue to suffer for it. So what can you do now? I would say, obviously don't panic. None of us usually have to because we are stackers. I would say hold out, because likely with all this turmoil, the value of the dollar is going to go down, especially if they keep increasing interest rates. Or, especially if they keep on the road that they're going, printing money. They may still be raising interest rates, which is actually strengthening the dollar, but this is just not good look for anyone. So I expect metals to go up in the subsequent weeks here, depending on what rabbits they pull out of hats. But this just is a better argument for being your own bank, stacking some silver, some gold, some precious metals, food, supplies. I mean, you just never know what kind of emergency or situation is going to come up, and this just goes to prove it. If COVID didn't teach them that the bank's not always going to be there to give you your money, here's another lesson for the few that were on the edge. Your money's not really there, not all together, not on a whole, and you don't have access to it anytime you want. So keep those things in mind. Be prepared, be calm. No need to go pull everything out of the bank. But definitely going to be some interesting and tumultuous times here going forward. I appreciate everyone's time and attention. Be safe out there. Be kind to people. And keep an eye on the price of silver and gold, because I feel like it is going to be heading up in the next few weeks. All right. Thank you, everybody. I'll see you soon.